Okay, what's up, my people? It's your boy DFX Hunter, right? So, I've come with the promise which I gave you guys that I'm going to analyze Usdjpy, and yeah, I am, guys. So, firstly, one thing that I can say is thank you so much for your time, and just stay tuned as I'm going to explore and expand these. Guys, forex is simple. So you are going to understand that I'm not using indicators here, and that's why I always use a concept of top-down analysis by following the market movement, which is a price action, right? So you could see this is a monthly, okay? And trust me, you can't enter the market into the monthly time frame. No, monthly is just where we spot out good entries, right? Or this where we spot how the market was moving. Just imagine when you look here, you're going to find that this was almost in 1987, right? So this market has been there for so long. I was not even born here. 1987, I was not even born here. So the market has been for so long, okay, for so long. So firstly, you have to spot the direction of the market. How was the market moving, or how has been the market moving for so long? Okay, so when you draw something like a trend line, you can realize that the market was downtrending here. Okay, meaning starting from 1990, right, to to can it be 2022? I don't know, right? Yeah, to 2022 January, Monday on 3rd, the market has been almost downtrending. So there is a break of the market structure here, right? And then the main purpose of using a monthly time frame is just to spot out the key levels, okay, where the market was turning. Key levels. So the first key level is this one, okay. So so this is the first key level, okay, where the market, when the market reach to this side, there will be a likely of turning point. Then the second key level is this one, right? So we have to spot key levels as much as we can on the monthly time frame. Okay, remember, we are not entering the market into the monthly time frame. No, excuse, but we are entering the market on the optimum levels. So, but how do we enter the market here? Okay, we enter the market by spotting the higher time frame levels. All right, so I hope you are seeing what I'm doing. Okay, I hope you are seeing what I'm doing. So I'm just spotting the market key levels. You guys, you must recall it: support and resistance, supply and demand zone, something like that. Others, they call it, how can we, you people call it in a different ways. Yeah, but commonly you guys call it support and resistance, supply and demand zone. Trust me, all those things are just the same. All those things are just the same, and that's why I call them as key levels, right? As key levels. But remember, this is the monthly time frame. So the key concept of the monthly time frame is just to spot out the market direction, right? The market direction. So we have spotted which we are calling, or which we call support and the resistance, right? Or the major key zones, or the major key levels. So imagine when the market break out this structure. Remember, so there's something which I draw like this, right? Yeah. Sharp. So when the market blacked out this trend line, okay, it started going up, going up. There was also a breakout of this zone, breakout. We can raise as a retest, then boom. Okay, so the market has been on the selling projection to this zone, right? Remember, we are using a concept of monthly here. The market has been sold, I mean bought to from this side, now going to this level, to this zone. Okay, now imagine anything is possible here. The market can like it also to turn here, right, and start coming down. Reason being, it can also form a double top. Okay, because it can also form a double top here. You know, the market is very simple. It can also form a double top. If not, it can go straight to this highest zone, right? So how are we going to predict now the movement? So here we have to keep two possibility mindset, that if it will form a double top on this area where the market is, we need to wait for the candle formation. Okay, something like a bearish pin bar, okay, or the engulfing pin bar, right? But let's lower it down to weekly time frame, to a weekly time frame. Hope you guys are getting me. Just follow me patiently, and you're going to see it sharp. So firstly, just focus on this zone, from this zone and this zone. That's where you can focus. Let's analyze this now. We come now to weekly. Remember, you can't enter the market into weekly. Okay, we're just using this concept to optimize the best entries. So when you look to the left side of the market, you can see that the shadow is almost here. Okay, and when you see this, this is the bearish pin bar, the exact one, pin bar. Okay, so when you see this, this is the clear indication that there is a possibility of the turning point of the market, right? So when you use a concept of 50% entry, okay, meaning you can spot out this entry. No, I'm just removing this because I'm making the market very clean and simple, meaning the market is likely to reverse on the 50% entry. Okay, so some people they call aggressive, some people they call conservative, right? Meaning if you want to enter here as a 50% retracement of the pin bar, so this is what we call aggressive entry. Okay, if you want to wait until maybe to this far point end, so this is what we call consecutive entry, right? So the possibility of market to sell is almost high due to the left part of the candle, which is a pin bar in a weekly time frame. You get me, right? Sure. So but again, when you look to this uptrend of the market, you are going to find that there is also a continuous spin bar, right? There is also a continuous spin bar. So how sure are you that the market is going to turn? Here we just have to wait for a clear formation of the market candlestick, something like this, which is a bearish, right? A bearish pin bar, or something like a bearish engulfing pin bar, right? So, but the possibility of market to turn is very high due to the left part of the candle, which is this candle. So we are still analyzing, we are still narrowing it down. We come to daily, so which is 24 hours, right? No, this is how we trade forex, guys. This is how we trade forex, because these are almost, these are almost 1,500 pips. My bad. Okay, this is almost 1,500 pips. Okay, okay. Do you remember this? So in weekly, this candle was a bearish pin bar, and in daily, when you look to this candle, you are going to realize that this candle has been engulfed by this one. So this is a bearish engulfing pin bar as a daily. So the possibility of the market to turn down is high, right? It's very high. That's why we are anticipating that by entering the aggressive entry, we must enter here. Okay, by waiting as a consecutive entry, we can also still lower it down at least a little bit into the 50% of the remaining 50%, which is almost 25%. Hope you get it right. From here to here, this is like a complete candle of the pin bar when we go to the weekly time frame, right? So, but we lower it that shadow to 50%. So the remaining 50% here, so we can also cut it again to 75 entry. Meaning, if you are patient enough, you can wait for the market at least to pull up a little bit here, then you enter, you execute, you enter. Get me right? So you can do this. If you want to risk less, you can do this. You can wait for the market to pull up at least into this zone, then you enter. And again, you can't still, despite the monthly, weekly, is giving us so much promising due to the risk, because if you calculate how many types, like how many pips which are here to here, there are a lot of pips, right? So you can still analyze a little bit now into the 4 hours time frame to see what is happening. Remember, we are still referring to the monthly time frame. This spot we spotted here, it was in the monthly, weekly, daily. It is also giving the same aspect. Meaning our intention here is we have to focus on selling, because weekly is convincing us to sell. Okay, monthly was giving us a double top, right? So the possibility of us to wait is very high, so that we can make some good cash from there. So this zone is a 50% entry according to the weekly bearish candle, right? So, but we can still wait or try to anticipate a little bit of market manipulations to reach at least to this side, right? So once the market reached into this zone, boom, trust me, it is going to sell. Okay, trust me, it is going to sell. Trust me, it is going to sell. So let's do this. So let's wait for the market to make a very good optimum entries. Okay, a very good optimum entries into this zone. Okay, why have I reached to this zone? Because I really love round numbers, right? I love round numbers. So if you had to spot out TPs, so where should I be taking profits? So you can be taking profits in this zone of the round numbers, right? So like 147, I'm going to make it edited well. And then you can also put your stop loss, I mean your take profit on these round numbers. Okay. Also take profit in these round numbers. Okay. Also take profit in these roundy numbers. Okay. So what I mean is this. What I mean is this. So we just have to make this 136.0, right? 137.0, good. So this is the perfect round number. Okay. So I think next time I'm going to teach you guys on how to spot round numbers. Trust me, these numbers, they are heck to the market. Trust me. They are hackers to the market. Yeah. This one, 147. Okay. Okay, so this is just a movement, right? Meaning, this is how we have come to analyze the market, that you can wait at least for the market to move a little bit higher there, then boom, you sell, right? Then boom, you sell. Remember the TP, the TP is here to here. Now see how you're going to risk. Okay, so the risk is so minimal compared to the reward. Okay, compared to the reward, because if you could reach almost to this far end here, okay, or maybe right now, how many pips are these? So that's almost 1,300 pips, 1,373 pips, right? So these are pips that we are going to anticipate into the future, right? So these are pips that we are going to anticipate into the future. So that's how we guys analyze the market. So let me just make you so that you can make it simple. My bad. Right, right. Oh, this is 30 minutes I've done. Come on. Okay, so let's do this. 24. Okay. Okay. So you know that point. So this is how we analyze the market, guys. So let me tell you the secret. Let me tell you the secret. How sure are you going to know that your analysis is almost making sense, right? So your analysis is going to make more sense if you see the report from the dailyforex.com, right? So go to dailyforex.com, go to the big banks report forecast of the market analysis. Once you see that your analysis is almost equal to what you have analyzed, trust me, then you are almost there. Because the heck of this entry is 150.0, okay, meaning here. So once just the market reaches into this zone of 150, trust me, the market is going to sell. So compare your analysis according to the big banks analysis. Okay, go to the dailyforex.com and see how they have analyzed their projections of the market. Once you have seen that, trust me, it will make a sense out of this. To make a sense out of this. So always, my encouragement is always follow the higher time frame, follow the market structure, price action, then keep lowering it down, 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 down. Because once the market has reached here, meaning you just like move your stop loss, which is from here to here. Okay, when the market reaches here, you also move your stop loss to here until you bounce back all these 1375 pips. You get, guys? So increase a lot of patience into this. Once you are patient enough, trust me, you're going to make it. So this is how we analyze the market, guys. Because we have seen that like instead of you making 100 pips in a day, anticipate 1000 plus pips, then you are just going to be entering the market. No, so like for instance, we anticipated this move, right? Meaning we could have just been entering here. We enter. After pullback, we also enter. After pullback, we enter. After pullback, we enter. That's the same concept that we're going to be using here, okay? After pullback of the sell, we enter. After pullback, we enter. After pullback, we enter. Till to 1373 pips, right? So this is how it is. This is how it is. So guys, I hope this video is going to help you. Remember, I'm not using anything like an indicator here. So for you to prove, go to the other type of big broadcast, like big banks reports of the market analysis, and then see how they have analyzed USDJPY, and you are going to thank me later. Trust me. Thank you, guys. Take care. Thank you.